Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 34th COT report in 2014, and as usual we're going to start off with the changes in commercials position. So here we go. Soybean meal on top of our list with a 34% change in commercials positions. You can see the change over here. It's definitely a larger change than average. We do see greater changes in the past. This one may be larger. All this happening after a pretty hectic move in price. As we've discussed many times in previous reviews, soybean meal and soybean markets in general are great markets for COT signals. Moving on to the 5-year chart, let's have a look at the extreme in this market. Right now, we cannot really talk about it of a significant extreme. The last extreme was over here back in July. It was a more of a bullish COT extreme signal, but not the large ones. If you look at the chart, a significant, really close to all-time extreme signal would be around over here, meaning commercials being at roughly 40,000 contracts net long level. Now they're basically when they were here, they were in short, roughly 35,000 contracts net short. So it's really not a significant bullish extreme, but still, as you can see, it did manage to push prices a bit higher. And if you look at the chart, we do see some examples for these relative extremes to be actually effective signals. But anyhow, right now at the moment, it's really not a significant extreme that we can talk about in soybean meal. Moving on to the Mexican peso, we have a 19% change over there in commercials, and basically exactly the same change size in large speculators. These changes are large, but we do see much greater changes in Mexican peso. And if you look at the chart, the last large change that we had were these bullish ones, effectively pushing prices higher. Now we have this bearish signal. Question is, would it be as effective as the bullish ones were? Well, let's look at some examples. Here we go. You can see a similar size of change back over here. And you can see that it was an effective signal, pushing prices a bit lower. Then we had, well, not as large signal, but we had one over here. I don't know if it's easy to see, but we can analyze it on a shorter time frame to see whether it was an effective signal. But here we have another one, another bearish COT change signal, pushing prices lower. And then another one again pushing prices lower. So, well, more or less we can state that these signals were effective in the last 52 weeks time range that we can see at the moment. Moving on to the 5-year chart, let's see how extreme the Mexican peso is at the moment. You can see that we had a very large bullish extreme signal in the beginning of the year. We haven't reached these levels yet. We had a more of a relative extreme, not that significant, but in general we can state that this bullish extreme is still in place, pushing prices higher. And since we do not see any bearish extremes at the moment, I'd say that it's basically this bullish extreme that is influencing prices at the moment. I don't see, besides of course the change signal, in the medium to long term, anything against the continuation of this bull market at the moment. Japanese yen, our next market, the same change size over there, except it's an opposite signal. We have a bullish change signal, and you can see that the 19% change in the Japanese yen is pretty frequent in this 52 weeks time range. So we see this change size more or less, well, I wouldn't say every week, but these are we should be used to these changes. So let's move on and have a look at the 5-year chart and see the extreme situation. Not much change. The extreme seems to be widening a bit. And it's basically this general bullishness that we have in the market. Basically, we had this major extreme in the end of 2012. Of course, it was a commercial capitulation back then. If you look at the chart, what happened, but the extreme stayed in the market, and it's still there, possibly pushing or ending this decline soon. Of course, this can go on for many months or even years before we see anything happening, but it's still there, and it's an interesting market that we should be analyzing week by week. Moving on to large speculators, COT Extreme. Here we go. Palladium still on top with the all-time extremes, both in commercials and large speculators. We talked about Palladium last week. Let's open the 5-use chart. Here we go. You can see that it is a significant bearish extreme. Well, it's an all-time extreme, so it cannot be any more significant than that. And the question is, are we going to see a top developing soon? At the moment, if you look at the price, it is pretty dynamic. And of course, as I said this many times before, extremes can be in the market for many weeks or even a month before we see any price reaction. So this extreme may widen. If you look at the chart, we've reached similar extreme levels basically roughly a year ago, and the extreme more or less stayed in the same position. So they haven't changed that much. We're still waiting for a significant decline to come. Soybeans, our next market, we have a 411 report extreme in large speculators. But if you look at commercials and small speculators, both of them are all-time extreme of the market, and it is a unquestionable bullish extreme. You can see how well soybean has reacted to these extreme signals in the past. So of course, it's again a difficult question. I've been talking about this bullish extreme a few reviews ago, and you can see that although we had a move in price upwards, then we saw another decline, a major decline. So it's really not that easy to pinpoint exact locations for bottoms and tops. But anyhow, it's an unquestionable stress level that we have in soybeans. Something that we should be aware of, and something that we can act on. I think that's a conclusion that we can come to from this COT report. So you should be analyzing soybeans in the next few weeks. There's some great opportunities here, I think. Coffee market, 338 report extreme in large speculators. Basically the same extreme in commercials. Here we go. You can see the extreme on this wider time frame. It is a bearish extreme, of course, no question to that. If you look at the chart, the last time we had such levels back in 2010 and 11, prices continued their rally. So it's just, of course, one example. We could go back in time and analyze the market from the 90s maybe. It's not necessarily something that we should be expecting the continuation of this rally, but I'm just saying that it may, of course, continue. But the rule is, I mean, it is a bearish extreme, and we should be expecting a decline from that angle, of course. Okay, that's going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.